Hello, speaking Forex. This is Gregory here. It is currently 8:40 p.m. Pacific Standard Time, May 16, 2012. I have a chart here of the dollar Swissy, and I will be very quick with this analysis. If you've seen the Aussie US dollar, this trade is actually pretty similar, but in reverse, because this is all based off of the dollar. So right now, it looks like this trend is starting to wane. We do have a what we call a 1, 2, 3 top, or as you can see, market flow is starting to break down. So with the buying pressure starting to wane, I think we can go for some really low risk trading opportunities to the downside. So depends on the type of trader you are. Some people sold the high here at 94.50, and the reason why is because of this half number. Remember, that's psychological supply, and also with this this pin bar here, and also with the breakdown in market flow. With these three things lining up at the same time is a good opportunity to go short. Some people are going to short beneath this pin bar. Once it breaks, they're going to start trailing the stops until they start hitting their targets. Depending on the type of trader you are, whether you're a day trader or more of a swing trader, or whatever type of trader you are, will determine how you enter and exit this trade. For me, my initial target would be at 93.70, and my second target would be at 9300. The 93.70 area is nothing but the top of the previous uptrend. The next area at 9300 is a even number. It's a round number that offers psychological support, and also with the gap from earlier in the week that provides more confluence for us. And also we do have a support area that lines up over here as well. So if we break the 93.70 and continue to go lower, I expect a lot of buying pressure to come into the market around 9300. But I don't buy on a touch. I'll wait for some type of confirmation before I continue moving to the upside. But one thing you have to be worried about is on the weekly chart, we do have a congestion area on the weekly that occurred from pretty much the month of January. So I expect as we get around these areas, we're going to struggle in price. So the dollar Swiss may not be the best currency pair to trade. You may want to focus on something else, maybe like the euro or the Aussie. It just really depends on your risk parameters that you have intact. But once we surpass the 9600 area, we actually have we have more space for price to go as far as hitting our targets with relative ease. So that's my analysis for the dollar Swiss, and hopefully you looked at the Aussie dollar and you can actually benefit from these trades. We do have a course called Plus EV Trading, which will be released pretty soon. It will help elucidate a lot of these concepts I talk about as far as support and resistance, and supply and demand, and trend lines and Fibonacci analysis and all that good stuff. And also we're going to do something new. We're going to talk about the mathematics behind a lot of these trades. A lot of people really don't talk about those things, so it'd be a good thing for you to learn some new concepts, and you can really understand how statistics and probability and stuff like that really plays into trading, and it can help you become a much better trader. And even if you're not really good at math, at least learning about the basic concepts will actually bring new light and help you with your overall trading approach. So this is Gregory here. I'm signing off at 8:45 p.m. and we'll be giving updates on both this currency pair and the other. And if you're going to follow other dollar pairs at your own leisure, that'll be good exercise for you. And so I'll be back either tomorrow or on Friday or over the weekend with updates on what to do after we hit our targets, and hopefully we'll be in the money. So we've been doing pretty good so well if you've been following, and we've been hitting all of our targets with our relative ease. So hopefully that's going to build confidence for you newer struggling traders out there. So thanks for tuning in, and until next time, green trades.